Hey guys, Akil Stokes here. Welcome back to another episode of The Trading Edge. If you guys are brand new, I'm a Forex trader, trading coach, and one of the co-founders of Tier1Trading.com. And this is a video that I've been doing each and every week for the last, I don't know how many years here on YouTube, sharing with you some of the top trading ideas on my radar for the week to come, and a very important lesson that will help push you towards consistent profitability in your own trading journey. Now, usually in these lessons, I look at my top 3 trading ideas for the week, but this week we're only gonna do one because I'm in a little bit of a rush, right? I'm recording this late on Friday or later on Friday. I'm gonna be out of town Saturday. I got family coming in on Sunday. Originally, I was just gonna skip this week, but a little bit ago, I got a very cool series of messages here on Instagram. By the way, follow me on social media if you don't already. And I thought it was a very important topic that needed to be discussed, because if this guy's going through it, I know a lot of you guys are going through it as well. So if you're someone that's in this situation, I want you to kind of relate it to your own, give it a thought, maybe change some of the details to what you're doing. If you're someone that maybe has some experience trading, or someone that's maybe prepping to be a mentor or a coach in your own right, I want you to pause this video as we go on and think about how you would respond to this trader, right? One of the big keys of our success at Tier 1 Trading, and I've been telling you over the last couple of weeks about how many traders we've had funded and how the community plays a big role in that, is accountability. And we really encourage all of our traders not only to search for accountability partners, so people that they can turn to that are gonna help hold them accountable, but as you progress through your journey and you kind of go from the newbie to the experienced trader, you become an accountability partner to a younger trader. Again, it's going to help them process through the journey or progress through the journey. It's also going to help you continue to stay strong in your trading. Me and Jason say this all the time. I don't think I would be as good of a trader as I am now if I weren't in the coaching and mentor position, because being in this position, I have to be disciplined. I have to follow my rules. I have to consistently kind of, go over lessons and strategies and stuff like that. If not, who knows, man? Maybe I would have got a little cocky and started, feeling myself a little bit too much. And that's something that brings a lot of traders down. So if you haven't done it already, give it a try. Find an accountability partner, but also become one as well. But I got a message here on Instagram that said this. It said, Akil, I always have a winning streak of about 1 to 2 weeks, and then I lose in 1 to 2 days about 60 or 70% of my profit. Any suggestions on what to do? I asked for some more, a little bit of a deeper explanation. He said, well, in the 2 days that I take lots of losses, in the 2 days that I lose a bunch of my account, I take lots of losses. In my profitable weeks, I only take a few trades, like 1 entry per day. And then I dug into kind of the why and the rules and stuff like that. And I'll skip over a little bit of this. And essentially we got to the point, I asked him about risk reward, risk management, all this fun stuff, trying to make it short for you guys. Basically, we got to this point, right? Here was the conclusion. So what this trader was doing is that he was making a lot of money, right? Having these hot streaks, and then he was losing it all. And it's a very familiar story because I used to be like that as well. I remember I used to be a 60 or 70% trader, but I was break even, right? I would make all this profit and I would give it all away and kind of just be in that hamster wheel. And what this trader was doing is that, well, after he would have 1 or 2 good trades, he would stop trading. However, after he had 1 or 2 bad trades, he would keep trading more. So right then and there, what stands out to you? And this is where you want to pause the tape. If we were doing this live, I'm used to live sessions, I'd have you type it into the chat. You can type it in the comment section below as well. But what red flag stands out about this trader's actions? And more importantly, why are these red flags? So we want to know the why. It's one thing to know what we're doing, that's important, but if we don't know why we're doing it, we can't really stop it. So type it in, think it to yourself, write it down, whatever you want to say. And this is, at first I thought it was a risk management problem, where I thought that, hey, maybe you're over leveraging your position size, you're trading too much, so when you lose, you're blowing way too much, or maybe you're getting cocky after a win streak, you're feeling yourself a little bit, you're upping your position size because you can't be stopped, you're on a heater, and then as soon as you up your position size, right, you blow it all, right? We've been having some good conversations about money management, not just in last week's Trading Edge, but in the coffee break episode we did on Wednesday. If you haven't seen that, check it out. It's a really, really good one where we talk about fixed percentage versus fixed position, take you through the spreadsheet, all that fun stuff. So that was my initial thought. But after some conversation, what it ended up being was really a trading psychology problem. It was kind of fear and greed, but maybe not in the sense that you're used to it, right? Usually when we talk about fear and greed, right, you're afraid to trade because of a loss. You take a loss and you fear the next trade because you don't want to lose again. Greed, you're on a hot streak and you never want that hot streak to end, so you want more and more and more. You want to make more out of your hot streak. In this specific scenario, it was one of those deals where the fear came from the winning side and the greed came from the losing side. And what this trader was doing is that when he would have that nice win, he would stop trading. Why? Well, because he was afraid to lose. He didn't want to give it back. He made all this nice shiny profit. He didn't want to give it back. However, when the losing streak came, guess what he would do? He would trade more and more and more and more because he needed to make it back right away. The way to avoid that pain of losing, because that's what losing is, it's pain. The way to avoid that pain, it's either one or two things. It's stop trading and you avoid it, or it's trade more in hopes that you're going to make it back. And trading more, probably trading more emotionally as well, dug him into a deeper hole. So he had this equity curve that was really, really good, and then it would go to break even, and really, really good and go to break even. And that's that boomer buster phase that Mark Douglas talks about, where the trader is too good to be a failing trader. So there's something there. There is skill there. There is promise and potential there. However, there are certain mistakes that are stopping you from reaching the top level of the pyramid, which is the consistently profitable trader, that 10% region. So what this trader needs to do, and if you're out there doing the same thing, what you need to do is you need to be consistent in your approach. I say it all the time, right? Consistent analysis plus consistent execution equals consistent results. Consistent analysis is being consistent in how you look at the market, right? Do you have a trading plan? Is it rules based? Are you looking for the same type of trades every single time? Meaning that you're not just bouncing around and going, ooh, this, ooh, that, ooh, this, ooh, that. You have a direct kind of sight at what trades you need to look for, what markets you look for them on, what time frames you trade them on. All of that should be 100% rules based, right? Consistent execution is on the psychological side. That's actually having the, keep it clean for YouTube, the guts, right? The confidence. There we go. You know what I want to say, right? You have to have the confidence to actually take the trade. So it's one thing to see the opportunity, another thing to take it. And it's also in that confidence ball is kind of having the discipline to avoid trades that you're not supposed to take. And this comes from, it's an easy fix, but it's not a quick fix. Let's put it that way. And the fix that needs to come is shifting yourself from being results oriented to process oriented, right? Process over outcomes, what we call it. Meaning that the number one thing that brings you pleasure or pain is consistently following your rules or not following your rules. It's not the result. We know that we can have 100% good trades and they can still lose. We can have bad trades and they can still win, right? They don't necessarily correlate on a trade to trade basis. So what this trader needs to do and what you guys need to do is focus and make it a goal to just consistently execute the plan. If you get a winning trade, that's good. Celebrate, play some music, dance, whatever you want to do, but come back, analyze the charts the same way. Don't be afraid to take the next trade because it doesn't necessarily mean it's going to be a loser. Take that next trade because it could be a winner as well. But take every single trade that fits your plan. And then same thing when you're losing, right? Continue to take trades, but don't take trades that you're not supposed to take, right? Only take good trades. Avoid the emotional losers because I bet a good part of that drawdown comes from trades that the trader isn't supposed to take. So I thought it was a cool story. Again, it was such a good lesson, and it hit home because I was like that as well, that I decided to do a weekend trading edge video for you. If you like that lesson, or if you have anything you want to share, whether it's your own personal story or words of advice, if you've been in the same situation and you found something that really helped you overcome that barrier, let me know. I know this trader watches the video. A lot of struggling and traders that are on their path watch this video. They read the comment section below, and they use it as kind of motivation and inspiration. So trust me, your words aren't going unheard. People are reading it. How do I know? I get the emails each and every week saying thank you. So let's hop into the chart. Before we do, hit that like button, subscribe if you're new. I was supposed to say all that stuff earlier, but I didn't because I hopped right into it. Do that while we're loading up the charts, and I'll share with you my top trading idea for the week to come. All right, so before we go into our trade of the week, I want to give you guys a little bit of an update of the trade of the days that we've been talking about here on the YouTube live stream. If you guys don't know, we've been live streaming my trade of the day. So the first pair that we discuss in my New York live trading room, live here on YouTube and over on TradingView every Tuesday, Wednesday, and Thursday. So make sure you check that out. And one of those pairs was going to be the dollar Swiss. I believe that was Monday. Dollar Swiss had a nice follow through. If you go down here to the 4 hour, you can see we pulled back right into our kill zone, gave a first strike entry down here with the higher high, higher close, RSI oversold, came back to double bottom for a second strike entry, and we now even potentially have a third strike entry if we come back and do a 26.18 type of trade. So some pretty good follow through on that. Aussie Canada didn't get the cipher completion. Some of you guys had a Gartley. My data was a little bit different, so I had a cipher. Did not happen, but we did hold our structure pretty well here. Nice little double top action, just like dollar Swiss. Broken close below, retested, so still an opportunity to trade to the bearish side here. And dollar Canada, we're looking for 3 ciphers on dollar Canada, if I can find it. Dollar Canada action was pretty decent as well. If you guys remember, we had a few different ciphers. We had one on the daily time frame, then one on the hourly, one on the 4 hour. The daily cipher is still potentially completing. If I can find a little tool here, I'll roughly draw it out for you. But we've also put in a nice little head and shoulders pattern as well. So a nice opportunity to trade it up if we do end up breaking that level. So that's a little bit of a recap from this week's trade of the days, or top trading ideas of the day, whatever I call them. Again, make sure you check those out every Tuesday, Wednesday, and Thursday here on the YouTube channel, 7:30 a.m. and of course in the live trading room. So we're going to dive in here on the Euro-Yen daily chart, and we have a potential advanced pattern formation setting up. I might have spoiled it earlier, or I might have edited it out so it's still a surprise, but if I didn't, what do you see in front of you, right? We have a potential Gartley formation setting up, right? So our initial leg right here, the swing high to swing low, is going to be called our X to A. If you guys remember from the training this week, this is the starting point, the most important part of the pattern formation, because without it, we can't have the pattern. And we spoke about this being the most important part, not to get on too much of a kind of a training course type rant, but what we noticed is that some traders, when analyzing the charts, we had a massive discussion on this, is that they look for the pattern requirements first, so like the specific Fibonacci ratios that need to get hit. They look for that first, and the price action movement or the structural integrity second. And when you do that, there's a high likelihood that you're going to force a pattern. In my opinion, you should look for everything one step at a time, right? So when you write down your steps for advanced pattern formations, step 1, identify X to A. Step 2, identify A to B. Step 3, identify B to C, right? And each have their own specific requirements, right? You should do it in order. That way you make sure you're actually seeing the pattern for what it is, instead of kind of reverse engineering and making it fit because you want it to be something, right? So if something doesn't stand out for you right away with the X to A, even if everything else is right, it's not going to be a pattern because step 1 was never complete. But in here, we have a pretty solid step 1. So an X to A right here, swing high to swing low. Our retracement back up is going to be our A to B. Our second retracement back down is going to be our B to C. And if price pushes up to this level right here, 132.74, we're going to have a CD completion for our bullish potential, bullish Gartley. And of course, that completion zone is going to go from the D leg to the top of the X leg right here in our VS1 level. Now, if you notice something, right, and this is why I love having them on the charts, it's like a second pair of eyes, right? There's another skinny box, right? Another VS1 level right on top. And VS1s are our visual support and resistance indicator, basically a visual structure indicator that tells you where major and minor levels of structure are, and you can kind of custom fit it to whatever you define major and minor levels of structure. So you can custom fit the zone. I typically custom fit the time frame. So daily zones, 4 hours, stuff like that, higher time frame, all of that fun stuff. They are a helpful tool, right? You still want to identify structure on your own, in my opinion. I've got a podcast coming out soon called My Indicator Stopped Working, interviewing a trader where he took a course or a training, something with someone. They gave him an indicator and the indicator stopped working, and he was kind of like, I don't like this, because what if I would have invested it all in this indicator and now it's not working? What do I have to say for myself? And absolutely nothing. So you always want to develop the skill of trading first, but help is always good. So this box tells me that there's a level of structure looking left, so look left, structure leaves clues. I want to be aware of this, because when we have it, and we call these overlapping levels of structure, when we have these instances of overlapping levels of structure, typically the higher structure level is the most important one, meaning that undereducated traders will put a stop loss maybe right at this level. Smart money knows that. It'll take them out, play around in here, take out all the remaining stops that are unsmart, and then reverse without you being involved. So you always want to make sure you avoid those levels if you can. And in this particular case, the traditional stops for your pattern formation, whether you're using a 113 or ATR, should be above that level, so you should be safe. Now, this bearish pattern formation isn't the only thing on the radar, right? There is a potential bullish completion or a bullish trading opportunity as well, right? You can see that we violated another VS1 level. This level of structure comes at the B leg, and we know that we're anticipating a move up to at least this level right here, 132.74. So we're looking at a move from about 132s is what we ran into to 132.74s. If we drop down to the 4-hour chart, you're going to see a loss of momentum pattern. There's a little candle missing right here, so I got to reload my data. But it doesn't really make a difference, right? There's a loss of momentum pattern coming right here, right? You can see a very steep slope in price action. And then the slope kind of loses its steam, right? Loss of momentum. You can look at the RSI starting to kind of even out as well. What you typically see in these pattern formations is a little bit of relief. So if the market gives us a little bit of relief, and let's say it retraces back down into our previous level of resistance, which should now act as support, that can also be a trend continuation opportunity and a chance for buyers to buy this up in advance of a move higher. And of course, the level that we'd be looking for if we had a move higher would be either to the decompletion of the Gartley that we previously looked at, or if we're going to be a little bit more risky, go up to the bottom of the VS1 level here as well. So kind of a 2-for-1 here on the Euro Yen daily chart, potential bearish Gartley pattern, 240, so 4-hour and lower, potential trend continuation opportunity. And of course, if you're someone that has the ability to trade both can be on your radar. You can buy it up, you can stop and reverse, sell it back down, and have a hell of a week potentially on the Euro Yen. All right, hope you guys enjoyed. Hit that like button before you leave, subscribe, don't miss the weekly videos, and until next time, plan your trade your plan, take care.